New data out today on the housing front. The National Association of Home Builders survey showing a decline in builder sentiment. It's the first since November, marking the second weakest level of the year. Meantime, shelter prices, those were up 5.5% in April from a year ago, which is down slightly, the pace of growth from March, according to the CPI report we got this morning. Joining us now exclusively, Invitation Homes CEO Dallas Tanner. Dallas, it's great to have you back on the show at a time where everybody is so focused on rent prices and the pace of those rent price increases, as we do see the reading in CPI where it's outsized and we know it's lagged. What are you seeing in real time across your portfolio, which really spans most of the country?
Yeah, it's a great question. I mean, we just had our earnings call, and while you're certainly seeing things moderate, pricing's still elevated. Demand's still really high. Our business today is about 97.5% occupied. We're seeing rent growth in kind of the low fives were the numbers that we shared for April from a blended basis. So there's still really insatiable demand. It all comes down to lack of housing supply, as you and I have talked about in the past. I think we've got to address some of these challenges. We need better access to supply for the marketplace. And while it's nice to see things moderating, supply is still certainly cramped. And so I think we're going to see additional pricing pressure on housing and housing costs for most of this year.
It's interesting to hear you say that. I mean, what do you think it's going to take to see, as you talk about moderating, what do you think it's going to take to see actual stabilization? And I ask that knowing that you are a buyer in this market, too, in some cases going straight to the builders themselves to strike deals to create more inventory for your own customers.
You're exactly right. We are hyper focused on trying to create new housing stock. We have a couple thousand units somewhere in the production line right now, and that will deliver to mostly Sunbelt and Southeast markets. That's been our focus. We're going to lean in on that strategy and continue to partner with really great public and both private home builders that want to create this additional scale. It takes a balance sheet and it takes a focus. And so we're going to use Invitation Homes and its balance sheet to really focus in on creating some of this new supply. It won't solve the problem, but we've got to do our part. I think the other thing you need to start to see is resale supply come back into the marketplace. We've talked about this in the past, but the reality is you have this rate lock situation where a lot of people are in a pretty affordable mortgage. And if you look at the bid-ask spread right now between what a new mortgage cost is relative to leasing or staying in your home where you currently have a mortgage, it's a huge differential. And so we're certainly seeing that in our customer profile. They're continuing to stay longer and longer and renew it at pretty favorable rates.
Dallas, what do you expect is going to happen to all of this rental stock when the housing market eventually normalizes?
Well, to be clear, I mean, we've seen since 2016 less single-family rental available in the marketplace over the last, call it 7 or 8 years. There's definitely been a focus on building some more kind of scattered site, smaller, what they call BTR product out on the periphery. Most of it's getting absorbed just due to the lack of supply. I do think one area that is of focus for people that are leasing right now that's been extremely beneficial has been you can build positive credit while you're leasing. We have over 190,000 people in our homes right now that are leasing and building credit. We've seen average credit scores bump 33 points over that period in the last year.